The Santa rally hit the wall. Hi, Dean Jenkins with FollowMeTrades.com, and this is the market update for the week coming up of December 24th, 2018. So that'll be Christmas Eve. The market will be open half a day on Monday, Christmas Eve, closed for Christmas, of course, on Tuesday, and then open the rest of the week. So we got 3.5 trading days left for the year. And guess what? There ain't going to be no Santa Claus rally. We are in a bear market of, some velocity, some ferocity. Now, even if, no surprise, you're following the market, right? The last couple of weeks have been, there's been tremendous momentum to the downside. I wouldn't say brutal because for those who have been prepared, we've made a lot of profit. I'll show that in just a minute. So I've been talking about this down move really since it got confirmed back in October when we had this break through the 200 and a pull up. If you look at the newsletters that I've been publishing since then, really back to here, this was in October. It says just because the bull market's over doesn't mean the profits are gone. So we were talking about it even back then, and then giving updates on what to watch for, key levels to confirm it. 2 weeks ago I said, hey, Death Cross killed the Santa rally, and now any hope of a Santa rally hit the wall. And by the wall, that's kind of tongue-in-cheek. Because the government shut down on Friday over funding for the border wall. But there's also still concern about tensions with trade. There's concern about staff turnover at the cabinet level with Defense Secretary Mattis leaving. So a lot of things to worry about, staff turnover at the White House, the cabinet, trade concerns with China, government shutdown, and those are kind of the headline items. And just looking at the technicals, we've seen this coming. There's always something to worry about. But back in October, again, when we broke through the 200, we had low, lower, high, low, lower, high. We started forming these pyramids. We broke through the Ichimoku cloud. We had the death cross. The 50 crossed the 200. We've had negative momentum. The signs have been there, and here we go. Now, this has been a dramatic move over the last 2 weeks, even more dramatic than up here. Just straight down. So at some point, and I'm not sure when we'll see it, we're going to get a retracement. We could probably get a pretty sharp retracement. Now, the S&P 500 has lost over 500 points from its all-time high of 2940.91. We're down here at 2416, so more than 500 points. We could go up 200, 300, 400 points. And the level to watch, in order for this to be over, it's got to get above this prior high here. Right, as we take a look at lower lows, lower highs, lower lows, lower highs. There's the last lower high, meaningful one. So price would have to go clear up there through the cloud and get above that, close above 2785, which is almost 400 points away from where we're at now. So we could get a pull up, even up to the cloud, a pretty sharp one, and this downtrend is still intact. And where could this downtrend go? Where will it go? I think there's a pretty good probability that the bigger correction is underway now. So we've had, a wonderful bull market of historic length, starting back in 09 all the way up 9 years. But we have clearly this is a weekly chart I'm showing now, broken down through the Ichimoku cloud, broken down through the 50-day moving average. We got a pretty clear low, lower high, new low. We do have the 200 moving average here on the weekly. But I think we're going to penetrate that again. We could get a reversal up like I talked about on the daily chart, but I think we got more to go. Midpoint for the correction on the weekly chart, 1887. So somewhere between a 38.2 to 61.8 Fibonacci retracement on the weekly chart. I think that is the high probability outcome. Now we could have, again, a good rally, and there may be some long trades to trade during an extended retracement up. But the big picture, it's down. But like I said, for those who were prepared and methodical and ready, there were profits to be made. Let me show you where we stand with Follow Me Trades. Before this started, we were about 18 to 20% profit year to date. Let me show you where the S&P 500 is at year to date as of Friday's close. It's down 9.61%, nearly 10% for the year. Follow Me Trades, the trades we've been taking, we're up about 18%. If you look at my home page, let me pull it up real quick. As of early December 1st, we were up 18%. We've closed a handful, so we're really up about 20% right now. And then I've got open trades. These are trades that we've been in for, between 2 weeks and 3-4 weeks. Primarily short, so I've got 5 short trades, 1 long trade. The long trade is on gold. It's on Anglo Gold. And we're in profit. And as even Friday, there was dramatic moves down on the short trades, a little bit of movement here on not meaningful on the long trade. If I were to close all these trades right now, that would be based on a $100,000 account, $6,500 in profit. I could add that to my P&L and we'd be at 26.5% profit for the year. I'm going to let these run and manage them as per the trade plan, but I just want to show that we've been doing really well. And it's not because I have a crystal ball or there's any magic or special sauce. It's just following the realities of the market, using a disciplined approach, seeing the opportunities, taking advantage of them. So we're having a really good year, and I think some other people who have disciplined trading approaches. The buy and hold folks, they're getting hurt. So if you are interested in following along, we're going to continue to trade like this the rest of this year and the next year, all through next several years. I plan to continue to trade and just take advantage of the reality of price movement in the market and go where it's going, use a disciplined approach with risk management and trade management, and try and grab some good consistent profits. So there's a link in here if you wanted to sign up for a quick trial and check it out. But meanwhile, let's finish the analysis here and check out gold and oil. Here's gold first. Gold I'm bullish on. It is in a pretty good retracement, and again, when the market heads down, a lot of people, it's called the flight to safety, flight to quality. People go into gold. Most of 2017 had a big, huge pullback. Now it's working its way up, high, higher, low, high, higher, low, new highs. And I think it's got more room to go. It's in the retracement zone. Again, I think it'll go higher. I think it'll break through the 200 here and continue up. Oil is super interesting. Oil futures. Of course, oil has just absolutely collapsed starting back in October. A really dramatic move from 76 down now below. It got below 45 for a while. And what's the floor? How low is it going? I don't know. The prior low on oil is from summer 2017. It's 41.50. That could probably provide an important support level. At some point, this is going to stop, and we're going to get a retracement to it, and that may be tradable. When we do get evidence of this turning around, even a 50% retracement could be very highly tradable. So let's keep an eye on that. But for now, I think it's too late to try and short it and way too early to try and go long on anything directly correlated to the oil futures price. So S&P 500, again, we're going to trade the realities. If it keeps going down, we'll go with it. If it reverses up, there may be some long opportunities. There are always opportunities, and there are stocks out there and instruments that are not correlated to the indexes or the major commodities, and there's always trading opportunities. We're always looking for them. Well, that's it. Hey, have a Merry Christmas, a Happy New Year. I won't send an update in until after then. So thanks for tuning in. Be sure and leave your questions, your comments, your feedback. I respond to every single one. It's been a really good, interesting, challenging year, but interesting, and we ultimately made some pretty good profits out of it. Looking forward to an exciting year in 2019 as well, and I hope you'd be a part of it. All right, take care. Thanks. Bye.